to another episode of Kapeleris Talk TV. My guest today is Cathy Aquila from Cmhc, Canada Mortgage and Housing Corporation. Welcome.
Thank you very much, Carmela.
For those that don't know about Cmhc, what is it and why would a consumer need it?
So Cmhc is Canada's national housing agency, and we've helped millions of Canadians meet their homeownership dreams. We play many roles at Cmhc, one of them including we provide $2 billion annually in investments so that we can assist low-income households, persons with disabilities, low-income seniors and Aboriginals, among other people, achieve their homeownership dreams or provide them with the assistance that they require. What I'm here to talk about, although, is the mortgage loan insurance that we provide, and that's to achieve homeownership dreams for millions of Canadians.
Right. So the thing that Cmhc is about is mortgage insurance premiums, and they can be added onto your mortgage. But how are mortgage insurance premiums calculated?
Okay, so one of the most difficult things about purchasing a home, especially the first home, is saving up for that down payment. So
Correct.
If a consumer does not have a 20% down payment on the purchase price of a home, they require mortgage insurance through Cmhc. So this allows a homeowner to purchase that home, get into this wonderful homeownership market a lot sooner. So depending on the amount of down payment, so if it's less than 20%, the higher the down payment, the lower the premium. And so this premium is added onto the mortgage. It could be paid up front, but 99% of consumers add it onto the mortgage. The only thing that is payable at the time of closing is PST on the premium.
Oh, okay.
Yes.
That's good for people to know.
Correct.
Yes. So now, mortgage insurance premiums can also be calculated on your website. You have a calculator for people that want to find out roughly what they would be paying extra on their mortgage and premiums.
Correct. We have 5 calculators on our consumer site, cmhc.ca, and one of them includes this premium calculator. So they just plug in the purchase price, the mortgage amount. It's going to determine how much of premium they pay depending on the down payment.
What are the other calculators on your site?
The other calculators on our site are affordability type calculators.
Right.
So again, they would plug in how much of their income they have and how much of a home they can afford, as well as a budget calculator. So there's several of these affordability calculators that we have to assist consumers throughout this process. So that's what's so wonderful about Cmhc is we're here before, during, and even after their home purchase.
What would roughly be the percentage of insurance premium that they have to pay on 5, 10% down, and 15% down?
Okay, so with a 5% down payment, it depends on the type of down payment they put. We differentiate it between a traditional source of down payment and a non-traditional. So let's say someone was going to put 5% down from their own savings. That's considered a traditional source of down payment, as is proceeds from the sale of another property, RSP, borrowing from their RSP. That's all considered traditional, and that would be 3.6% on the mortgage amount. If it's a non-traditional source of down payment, which could include borrowing, so perhaps they're borrowing from their line of credit, or they're getting a gift from a family member and they have to repay it back, then that would be 3.8% on the mortgage amount. So, and then from there it would go again lower, 2.4% if it's 10%.
Right. Insurance premiums increased in 2015. Can we expect any changes or updates coming soon?
Okay, so what Cmhc does is at the beginning of the first quarter of the year, we review our products and our premiums, and we'll determine whether or not there will be a change, and we announce it at the first quarter of the year. So we just announced that we will not change any premiums or our products, but what did increase, and because we're governed by the federal government, what did increase is that if someone is purchasing a home and it's over that $500,000 mark, then the portion over has to be a minimum of a 10% down payment. For example, someone's purchasing a $600,000 home. That first $500,000 can be 5%, so that would equate to $25,000. That additional $100,000 has to be 10%. So in this case, it would be $10,000. So that was the latest announcement that was announced in 2015.
I see. Yes. Let's talk about the different types of programs that Cmhc has. One important one is the Newcomers to Canada program, which is for permanent and non-permanent residents. Can you
Correct.
expand on that?
Absolutely. So because we are the leader in housing research, we have developed a microsite within our website for newcomers to Canada. And this provides information on folks who are currently renting, they're purchasing a home, or even they want to maintain their mortgage. We have this information available in 8 different languages. Now, so for those who are new to Canada, we've determined that some may have difficulty with when it comes to establishing their credit. And so we differentiate between a permanent and a non-permanent resident. So if they are a permanent resident, they're privy to all of our products and our premiums. They can put as little as a 5% down payment, but we recognize that their credit history may not be as robust as someone who has lived in Canada all their life. Because of this, we offer more flexibility, and we will allow for alternative sources of credit. For example, a landlord letter coupled with utility bills or childcare expenses, anything that will allow us to see that monthly repayment pattern. Now, for those who are new to Canada and they're a non-permanent resident, as long as they're here on a work permit or a work visa, they're still able to purchase a home. And what we require there is a minimum of a 10% of a down payment, and they're only able to purchase 1 unit. So there are different products to accommodate those who are new to Canada and essentially new to credit.
Right, right. Yes, because it's very difficult for newcomers to Canada.
Correct.
What are the alternate sources of credit that
Yes.
you allow newcomers?
So what we allow would be that landlord letter. We like to see 12 months worth. So a year's worth of landlord letters showing that they've paid on time on a monthly basis for that year. Any type of utility bills, childcare expenses, things along that line that'll show us that monthly repayment. But this isn't just those that are new to Canada, even those who are new to credit. So you may have someone who just went through a marital dissolvement. They put all the credit in the spouse's name, and now the other spouse wants to get a mortgage. As well, someone who is a recent graduate, perhaps they have the income to support a mortgage, they don't have that robust credit history. So we're willing to take a look at things like that as well.
Yes, change of life, I suppose.
Correct.
Yeah.
Absolutely.
That is really good. Do you have mortgage programs for self-employed people?
We absolutely do. So we've always insured self-employed borrowers. We do need to see verification of income when it comes to self-employed borrowers. And the unique thing with CMHC is someone may be self-employed perhaps for 9 months, but we're okay with them being self-employed for 9 months as long as they've been in the industry for 2 years. So let's say you have someone who works at an IT company, they become a consultant for the past 8 months, and they think, oh goodness, now I want to purchase a home. Am I going to be able to? We're okay with as long as they've been in the industry for 2 years, we're fine with them. And we do like to see that verification of income, but another flexibility we do is that they're able to gross up their income by 15%, and that will assist in qualification because we recognize when you're self-employed, you have additional expenses that are incurred.
Right. What about if someone is self-employed but they're in a cash business?
Yes. So we do not have a stated income type program. It has to be verification of income.
Right.
So we like to see an average NOA, 2-year NOA, or financial statements from a practicing accountant. So they need that verification of income.
Right, right. Okay. Well, there's another program that CMHC has, and it's the Purchase Plus Improvements.
Yes.
Can you tell us more on that?
Absolutely. So this is a wonderful program. You know, we all know when it comes to real estate that location, location, location is the key. But I'm sure there's been times where someone may have found the perfect home in the perfect neighborhood, but perhaps they don't like that 1960s original kitchen, or they may want to have that basement finished. We have a program that allows a consumer to purchase a home, get estimates for work that needs to be done to the home, and then add it onto the mortgage, a one-stop shop. So for example, let's say they're purchasing a home for $400,000. They want to get the basement finished. They can even go to a local big box store, get some estimates, or get a contractor in to get estimates. And let's say they estimate the work to be $25,000. CMHC will take a look at the as improved value, so how much value it will add. Some type of renovations could add 100% value. So for simplicity purposes, now it will be the lending value will be $425,000. Then they have the option of putting a 5% down payment on that $425. So folks are
Nice.
able to enjoy all the renovations at the time of purchasing the home, as opposed to getting that home and then realizing 6 months down the road, wow, I really wish I had these renos
Yeah.
done. And then, they're more cash strapped because the cash flow isn't as accessible.
That's a wonderful program. Does CMHC provide us tradespeople and people that give estimates?
So CMHC does not provide any type of folks that provide estimates. We leave that with the consumer and the mortgage professional and the lender to deal with that.
Okay.
Yes.
You also have a green program in place that provides consumer with a 10% premium rebate.
Yes.
Can you explain that, how it works?
Absolutely. So what we provide at CMHC is if a client is purchasing a home and it's an energy efficient home, or if they're getting renovations to be done to the home to make it energy efficient, that CMHC premium that they paid, we will reimburse them back 10% of that premium. And that's in an effort to just contribute to a more energy efficient Canada. So it's an excellent product
It's an excellent program.
that not a lot of people are aware of. So they would simply just download the form from our website. They would go through the entire process, and then we'll reimburse them back that 10%.
That's wonderful. You also educate people on greenhousing, ways to save energy and water.
Yes.
Yes, and how do you do that?
So what we have is we have several different checklists and guides on our website on how to conserve water, how to conserve energy, and other green practices. So this can all be found on our website, and it's accessible to all consumers.
And it will help people with the Green Home program.
Absolutely, yes.
That's wonderful. Let's talk about aging in place. Can you tell us more about that?
Yeah, so what CMHC does is, because we have a plethora of information on aging in place, we have different information on universal housing. So this is the concept where adapting your home to the ever-changing needs. So whether someone has a small family and then anticipating the needs as they get older. So because of the aging population that we have several information on this aging in place. So it's adapting a home to allow for more accessibility and living independently.
And how does CMHC help with that?
We have all of this information within our website because of the research that we have. We've even actually just documented a lot of different options for people who are living with dementia. So even options like that, it's all the information that we research, and then we provide this information to the consumers.
Do you help aging people with loans?
Well, because we provide information to and budget that $2 billion to the federal government, that allows for programs that are delivered for seniors to allow for them to live more independently. Those programs are administered through different provincial and municipalities.
Right. What other programs does CMHC offer to help Canadians with their housing needs?
Okay, so we offer several different, when it comes to the down payment, several different flexibilities, mortgage loan insurance products, but it's more equipping the consumers with tools. So we have several mortgage apps, several free publications that a consumer may find useful, because what we want to do is make sure that the consumers are well informed prior to making such a big emotional and financial investment. So it's the information that we want to share with the consumers.
CMHC also has $2 billion in housing for low-income households.
Yes.
So you're not actually the expert to talk on this, but we do have someone from affordable housing coming on our next show. But CMHC is also involved with the Peel Affordable Homeownership program, which provides down payment assistance to eligible purchasers, correct?
Correct.
And there are some guidelines that they need to follow to be part of this program. One is with a 20% down payment assistant, they need to have a maximum property value of $330,000, a maximum household income of $88,900, and they need to be currently renting in the region of Peel.
Okay.
So for more information on that, you can go to CMHC, but more importantly to Region of Peel website, which I think we're going to put up on screen for people to get more information on the Peel Affordable Homeownership Program, or tune into our next show on affordable housing.
Now, I can tell you with the down payment assistance program, CMHC does recognize this as a traditional source of down payment. So we most definitely do support these type of programs that are administered throughout different municipalities across Canada.
Yes, that's wonderful.
Yes.
That's really wonderful. Can consumers get their credit report online?
Yes, so there are two main reporting agencies in Canada. It's Equifax and TransUnion. And what they can do as a consumer is order from both. They can obtain it for free if they request it through mail or fax, or if they visit one of the local offices. The only time there is a
That's
fee.
wonderful.
Yes, the only time there is a fee is if they request it online
I see.
and if they request their credit score. But what's very important is just to ensure that the information within the credit report is up to date and correct, because the last thing they'd want to do is have some sort of a hiccup or a challenge prior to purchasing that home, and then it may be a little time consuming trying to get that resolved.
Right. Can CMHC help them to understand their credit score? I believe there's a R9, which would be the best. Can you go through that with us very briefly?
Okay, so we have a lot of information on our website about how to help you understand a credit score. So with respect to the different codes, they're North American standard codes that both TransUnion and Equifax use. The R9 is actually a more derogatory one. We like to see the ones. Ones would be paid as agreed, paid on time. But there's a great booklet out there for free from the Consumer Agency of Canada that one can download and provide all the information, and all the codes can go through exactly what one would need to interpret a file.
Right. So one would be paid on time.
Yes,
What
paid
would be an R5?
So an R would be revolving or recurring, and that would be our typical, our Visas, our MasterCard, our retail cards. And the further you go up, so a 1 is great, a 2 would mean that they've been late for 2 months, 3 would be 3 months. So the further you go, the worse it would get, I'm afraid.
Right.
So 9 would be at the very worst. Let's say it was written off, or they've filed for bankruptcy. So we definitely like to keep the numbers a little bit low.
Exactly. Well, that's good to know, because a lot of people are very interested in their credits. And how does one better their credit?
So there's several different ways that one can improve their credit. What we like to recommend is definitely start establishing that credit, even if it's a low
Right.
risk.
Get a Visa card.
Correct. Start establishing that credit. And I remember hearing the saying, well, no credit is better than bad credit. But as we know in our society, we need to start seeing that accumulation of credit. Paying bills on time, that can have a detrimental effect on your credit score if one is starting to fall within that arrears. And also contacting the creditors immediately
Right.
if one is having trouble making the payment. So prior to it even being reported on the credit report, perhaps letting them know about that particular challenging month before it even gets to that point.
Because sometimes there's things on the credit report that have not been cleared up.
That's right.
So it's in your best interest to review it.
Absolutely.
How do you help people that have not so good credit purchase a home?
Yes, so we often tell them to start reestablishing that credit, so making sure that you're paying on time. But there's also different mitigating risks that the financial institutions will work with the consumer, whether it be mitigating that risk by adding another co-borrower, or perhaps the type of house that they're purchasing, maybe it would have to fit within their means. There's certain affordability measures as well we take into consideration, like certain total debt service ratios and gross debt service ratios. All of these are taken into account. We definitely don't want to put a consumer into a house that they're not able to afford. So once they start strengthening their credit,
Right.
everything will fall into place.
Right. Do you help people with rent to owns?
CMHC does insure rent to owns, and that's
that's
done through
great.
the financial institution.
Okay. Do you also have special programs for people purchasing secondary homes?
So with CMHC, we only allow for one residential property where it's owner occupied. If a client is planning to purchase another property, and if it's an investment property, they can purchase as many as they can qualify for, but we only allowed for one CMHC insured residential property.
Okay. Can you tell us very briefly before we go some of your other consumer tools
Yes.
and resources online, plus your mobile app?
Absolutely. So we have a wonderful mobile app. You know, buying a home is a wonderful, amazing accomplishment, but with it comes, it's an overwhelming process. So what we want to do is try to make it less overwhelming for consumers. So our mobile app is called Ready, Set, Home. And what it provides is it's a glossary of terms, because some of the terms, you know, as they roll off our tongue, it could be jargon to others, even the term amortization
Exactly.
or variable. So this provides them with a glossary of what that means, as well
Perfect.
as our calculators, and just a great, if they're looking for different homes, they're able to go through the checklist on this free mobile app. So that's just one of the many tools.
Yeah.
We have a home buying step-by-step guide,
Right.
and they can download it, or they can order a free copy if they want to contact you, or they can order it directly. And that's literally the ABCs and 1, 2, 3s of home ownership. Yet another thing they can educate themselves. If they're purchasing a condominium, we have a condominium buyer's guide. So we
Nice.
have just a wealth of different information available for consumers.
Thank you so much, Kathy,
Oh,
for being here.
it was my
It was very
pleasure.
informative, and I appreciate your time.
Oh,
Thank
my
you.
pleasure. Thank you so much.